So I'm Bob Crimmins. I'm the founder of Startup Haven, GP of Startup Haven Ventures, and I'm here today with Zach Coelius. Zach, I appreciate you coming in for a couple of reasons. Number one, you are uh, you are don't take this the wrong way, iconic in terms of like people recognize a trajectory. You have one of those trajectories that I think is fascinating and a lot to learn from, but not because you had some success. It's because what I know is before you had that success, you had to have had a bunch of piles of shit all around you for a long time. And that's the stuff that I care the most about. I like that sausage making in the early stage. You're most famous for, I think, as a founder, Triget, ad tech platform. And I'd like to know a little bit about that and how that came to be. And of course, there's a really cool poker feature of that journey. So maybe start, with your background as a founder. Like, what were the three that I don't know about? And because you had four, and so what were the other three? And then how did you end up at a poker table with Triget?
Yeah, yeah. Well, first of all, thanks for having me. I always enjoy these sorts of conversations. I'd like to say that I've never had a real job. Been a founder effectively my whole life, um, and hopefully I can always say that. Yeah, started my first gig when I was 16 at the Olympics. Just sort of, I had a long crazy story, but I had showed up there, and I was the family I was staying with. The guy worked for AT&T, and they were one of the sponsors for the Olympics. And he was like, "Oh, here's some pins, Olympic pins." And at the Olympics, everybody has pins. All the teams have pins. All the sponsors have pins. Security organizations, the media organizations, everybody has pins, little metal things you wear around. And um, these were like little gold telephones with the rings on them. And we went to a basketball game, and I noticed everybody in the sort of hallways trading pins. And I love trading. Like trading, I still love trading. Anything involved trading, I get excited about. So I went up there, and it's one of those games where you pretty quickly figure out what's good and what's bad, and you try to trade your bad pins for good pins, and then you trade good pins for a couple of bad pins, and then you can repeat. And within the next day, I had a few hundred pins because I was just like totally into it. And I was at the pin trading area, um, and this lady comes up to me. She's like, "What are your best two pins?" And I told her a story about these two pins that I had. And she's like, reaches in her fanny pack and pulls out 10 $20 bills, which for me at that time as a 16-year-old kid, that was literally
Yeah.
like my whole budget for the whole summer. I was like, whoa. And I probably made about $1,000 that day, and more the next and more the next. So that business ended up growing, grew into tickets and collectibles and all sorts of other things. And we had 13 people working with us in Athens. So it
Wow.
got to pretty good scale. So that was my first gig, and I've been an entrepreneur ever since.
I
Uh,
love that. So how long were you in the trading business?
I mean, it's like one of these, go to the Olympics for like a month, make a bunch of money, see a bunch of events, go back to school, sort of things. But yeah, I ran that at 5 different Olympics, and yeah, got it was a good journey. It taught me. I learned so many lessons in that
Mm.
that are um, that have served me very well ever
Yeah. Is
since.
there one? Is there a standout that you remember once you moved into the venture scale world that one in particular helped you?
Well, in the pin trading business, the you have to be very aware of the context. It's not like you're selling. It's all about location, and it's about are people buying, and it's about what they're buying. And if you're in the right place at the right time, the money just comes in faster than you know what to do with.
Hmm.
If you're in the wrong place, it's a complete waste of time. And so you have to be very adaptive, and you have to be very aware of where the market is and where the competition is. And at the Athens games in particular, that game, those games was a struggle until we figured it out. And then it was just like, money hand over fist. And venture is a very similar dynamic. identifying where is the puck now, where is the puck going, what does the competition look like, how do you position yourself so that you can be in the right place at the right time when the puck goes where it's going to go. And yeah, that's
Yeah, that reminds me. I think I saw something you had mentioned about. I forget what it was. I'll get this wrong, but bad ideas and bad markets don't interest you. You want at least an idea, a good like something you recognize a good idea in a good market. And it strikes me that what you were saying about hockey. Like if people want to play hockey on gravel somewhere, like okay, I like hockey, but that's not the right market. Like right, uh, the companies that you have founded and went on, like when did you learn the market and idea lesson? Because that often doesn't happen until you become an investor.
um no, I'd say for me, I learned the pin business is the market is very real. Like you go to the events and you see this event is great. My friends who went to Nagano, I didn't go. It was an Olympics I missed. They bought houses afterwards with all the money they made. Uh,
Oh,
the Sydney Games, I didn't make any money at all. I just basically went to a bunch of events. So you learn that lesson at that business. I learned that very much so, and now I learned that with my first Silicon Valley company, Triget. We started that in '05, and we were early in the online ad business. Great market, but our timing in terms of what we did in the beginning wasn't great because I didn't know what I was doing. We were very early into the real-time bidding market, and so we made that bet before anyone else did. And that went from when we started playing there's about 30 million ad impressions a day basically available in that market. And now I think it's like 30 billion. So some crazy number like that. So we recognized the trend very early on. Um, I didn't know what I was doing in terms of executing at the scale. Like now, the biggest outcome of that. So in that group, there was a group of us who went into that market, and the winner of that is now the Trade Desk, which is I think a $60 billion public company. Jeff Green did know what he was doing, and he won that. He won that dogfight.
yeah.
I was a 25-year-old kid and had no idea what I was doing. He was my age now, so I can only imagine
And,
competing at this
and
point.
yeah, that's the thing. You talked about being at the right place at the right time. When you look around now, and there's as I said, there's so much sausage making in pre-seed and seed. By the time you get to Series A, it starts to quiet down a little bit. By Series B, like it's not a lot of sausage making in Series B or beyond. But in those first few years, it's just so messy, and you don't know what you're going to come out with. And pivots are the coin of the realm, and uh, you know team matters, but so does timing and place and the rest of it. Like when you talk to founders now, how heavily in pre-seed and seed, and when you invested in Cruise through Syndicate and they did really really well, uh, where that allocation was not in a pre-seed round, I assume. Uh, but now you're investing really, really early in companies directly, and uh, the founders that you see now, like how do you triangulate on? Oh, I'm investing in this founder in this market with this product and that customer, and you feel like that's what I'm investing in, or how do you account for the just all that uncertainty? My top performing portfolio company almost ran out of money twice, pivoted ridiculously deliberately, like, okay, this is not scalable. We got to do something. Came up with great, right? They're a different company than what I invested in. I probably would not have invested in them if they told me this is, I've at least two companies. If they said, well, here's what we're going to pivot into, I said, okay, I'm not interested.
Yeah. So I think the Cruise example is a good one. So I invested in the Series A because I had known Kyle for many, many years. Tried to hire him to work for me over and over again when he was at Justin TV, and he was
Mm-hmm.
smart enough to be like, "No, dude, that's not what I want to do." And so we went and had coffee. This was in 2015 when I was just getting started. So all my capital was coming via an AngelList syndicate. So, I was just kind of like scrounging around for deals. We had coffee, and he told me what was going on, and he was like, "Oh yeah, the Spark guys are leading Series A." And I was like, oh, I know the Spark guys really well. I could help you with them if you want. And so he was like, sure, here's an allocation to invest. And so I, you know, fired up the syndicate, and it was the second deal I ever did. A year later, we sold that for $1 billion, and then suddenly everyone thought I knew what I was doing.
It's so
You know,
easy, isn't it?
yeah, it's too easy. I think the way I look at it is that like this is a relatively simple nonlinear multivariate calculus game, and so you've got a you've got a founder. So when it's someone like Kyle, I'll pretty much invest in people like that any day of the week, whatever they're doing. Um, they're just so good, and that oftentimes is when you run into the pivots and the changes because they're so good that like they recognize that the market and the product that they first set out to build maybe is the wrong thing, and then they follow their nose, and that leads them to a good place. Unfortunately for me, I've only got a handful of those people in my life that I've known for a long time that I can say, oh, this person is amazing. I'll bet on them no matter what. Um, and so usually I end up basically also saying, okay, what's the market? Because like, it doesn't matter how good you are if you're going to go into a dumb market, like that's a dumb idea. Like it just doesn't work. And so I generally don't love small, dumb, bad markets, and just try to stay away from them at all costs. With the exception occasionally if the founder is really strong, but generally I don't love it.
But when
And
you
then the
see,
third thing
yeah,
where I
go ahead.
spend a huge amount of my time is around the enunciation of value to the customer. So what I say is like until you can cold call a customer at 9 o'clock at night on their cell phone while they're putting their kid to bed and describe to them in one sentence what you're doing, and instead of them saying "fuck you," why are you calling me? They're like, "Oh, I actually want to talk to you tomorrow." And not only just like something they're like, "Oh, this is what we want to do," but this is something we can do today. You don't have anything. You're not there yet. But once you find that, what you find is that the business has become incredibly durable, and the business will invert. Like where before customer traction and revenue super duper hard, that actually becomes really easy once you find that crystallization of value, and then all the other things that are hard about these businesses become the bigger challenge. Managing your team, scaling it, building
Yeah.
infrastructure, all the stuff that comes with scale. And that area is where I spend a huge amount of my time trying to find stuff
Yeah.
like that.
Well, so you make me think of a couple things. What, like when you have a few people in your life that you'd invest in them no matter what they do, and then for everybody else, you have to come up with an assessment of is this a good founder or not?
Yeah.
And are there things I have an opinion about this, but what makes a good founder, and is it transferable from one fact? Like, is there a set of things if they have those things are a good founder? If they don't have enough of that set of things, are not a good founder, and you can pretty much exclude founders that you don't see very particular things that you can articulate as a characteristic or whatever feature of that founder.
Yeah, I mean, there's the usual list that you can go to Google, like, what are startup founder characteristics? Like,
Perseverance and yeah,
obviously, grit, perseverance, drive, super important. But the one that I really focus on is just intellectual honesty.
mm,
Like, the the problem with being a startup founder is that to be successful, um, you have to be willing to run through brick walls. Like it's just like that is so critical because this business is all about this escalation of hard problems, and every hard problem you solve, there's another one behind it that's harder. And some of those problems are brute force problems, and some of those problems are, you have to actually think your way around them. And so what I like to say is I like startup founders who are dumb enough to run through brick walls, but smart enough to listen when I tell them how they can walk around them. And that requires a lot of intellectual honesty. That you have to internalize that everything that you believe may or may not be true, and everything that everyone tells you may or may not be true. And how you find the truth in that journey, in that crazy maelstrom that is being a startup founder, is the most important thing because truth is what gets you to where you want to get to. And lying to yourself or letting other people lie to you and believing them is what gets you dead.
yeah.
And yeah, I spend a lot of time with the founders that I work with trying to figure out like, are they honest with themselves? Are they honest with the people that they work with and their investors? And are they really searching for truth?
That resonates with me a lot. Thank you. Well, so let's talk about poker now. This has been great. Where'd you learn how to play poker? Right.
So I started playing when I was in grad school. Um, Obviously didn't know what I was doing, but I enjoyed the game. And then got lucky when I first moved to Silicon Valley. I started crashing conferences trying to find a job. And I was at a conference called Demo down in Southern California. This back when that was a conference. And there was a VC there who at the time was at NEA, Patrick Chung, and we were like having drinks. And I told him, I don't know what we were talking about, but somehow poker came up and that I love the game. He was like, "Oh, there's this VC poker game." And I was like, "Whoa, that's cool." He's like, "I'll get you in." And every time I see him, I'm like, "Dude, I owe you so big. Like, whenever you call in that favor, you just let me know."
Yeah.
Because it ended up being this amazing journey for me because I started playing with those guys, and I think I won the first tournament I played in, and then they felt obligated to bring me back, and then next thing you know, we got funding out of that group of people, and then I built a lot of relationships with a lot of VCs out of that, and it became sort of the one of the key sort of nuclei of my Silicon Valley network was the poker scene, and so I played very very seriously for about 10 years. I like to say I was a semi-professional, and like I don't think I was ever good enough, and nor did I want to make the commitment to jump to trying to be a professional. But I was very serious about it.
It's a grind. I've been playing for a really long time too, and I've never thought about being a professional, but even being a semi-pro, like to put in the time, like to have a Hendon Mob profile, like at all, let alone be a pro. It's just a ton of time. I got a family. I care about my work. Like I could
Yeah,
never make that commitment.
yeah.
Uh, but for you, poker has turned out to be like when you started playing in grad school, that was, some other grad students or professors or whatever, like people get together, it's over someone's house. Ironically, that was my very first exposure to poker too, was in grad school, going over one of my grad school buddies' houses. And I had no clue. First time in my entire life I'd ever played cards at all. And reflecting back on that, it was a joke. Uh, but but the purpose then was sort of social. I didn't really care about the money or the thing. It was low stakes. And then fast forward, it took many many years. I didn't really play, and then I started playing again, and it was the realization that if you're sitting around the table with the right people, like the relationships are, it's uncanny and for me it was unheard of. I'd never seen anything in the startup world ever work that way. When you think back to all the relationships that you built from poker, certainly poker formed a basis for your Silicon Valley, but do you think that's a network you could have gotten other ways, other places, maybe take a little bit more time? Is there anything particularly unique about the way poker facilitated the relationships that you built?
I think it would be very difficult, if not impossible, to replicate the kind of relationships that I built because what poker does is it transcends social status um, in terms of your ability to be seated at the table is not a function of anything other than the cash that you have to play and your ability to basically keep your seat and not lose that money. And so, you know, I met very early on. Uh, I was at a VC event and I met this guy who we were chatting. He was from Minnesota and he was like, "Oh, I play poker. You should come play with us." And I was like, and I'm from Minnesota, and like we became friends. And he's like, I was like, "Yeah, for sure, come play." That guy was Dave Goldberg, who was Sheryl Sandberg's husband, who tragically passed away. Who basically was one of the founders of the game that Jason and Chamath and all those guys play in. And so I got invited into that game very early on. And like as a 25-year-old entrepreneur, there was no way that I was ever going to have a peer relationship with people like that. But as a poker player, yes, I did. Like I was able to sit at that game and play that game. Now, unfortunately, I was never rich enough to like actually play the way I normally play with those guys. And so Chamath would hated the fact that I was such a nit. He still hates the fact I'm such a nit. And so, I wasn't a reg in that game, but like games like that, and there's a lot of them. Yeah, I got to build these very long-term relationships with people who were at very different stages in their career, very different sort of stages in every aspect of their life. And then, it was about my ability to play. I mean, I think it's no different than if you're like a professional golfer or, I'm trying to think of another game that's similarly social where the amateurs get to play with the professionals. It's a pretty unique
Yeah,
dynamic that way.
yeah. Well, and so what do you think about stakes? So certainly, like Jason Schmoth game, that you don't go in there with pocket change, right? So
Yeah, yeah,
and it
totally,
changes the way you play. I'm
totally.
curious, are
Yeah.
you in net when you're just playing your the stakes that are right for you?
No, 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 no.
Yeah, yeah,
I'm
yeah. I didn't think so.
I'm absolutely not. No.
Yeah. So
But when I'm playing with those guys, 20, $30,000 is a small stack,
yeah,
and so I don't play freely with that kind of money like I would in a $100, $200 game.
yeah.
Um, so yeah,
Well,
it's
so one of the things that I thought that I had learned, and everything you said it maps so much to my experience. Like at the table, everybody's equal. That's a leveling effect. Like you could be the manager of $1 billion fund and two gals in a garage
yeah,
who
doesn't matter.
don't have two nickels to rub. You're all equal at the table,
Yep.
uh, unless it's a 10,000, 20,000, $50,000 buy. Then you're not equal. Then the two gals in the garage can't sit at that table, right?
Well, I mean, yeah, but I think the thing about poker is that if you're a good poker player, you can put together the stake to play at a higher and higher level as a function of your skill. So, like when I first started playing poker, like I couldn't have played, in a $500 game because I didn't have that kind of money in my bank account. But poker gave me that bankroll, and my skill enabled me to not only keep that bankroll but to grow it and grow it to a place where now I can sit a very large game. I can't sit a multi-million-dollar game, but like I can sit a very large game and I can hold my own.
Yeah.
And you know,
There was a in the Wired article. So Wired wrote about your poker exploits,
yeah,
and how you got a little bit of money for Triget. You
yeah,
know, the admonition was founders, you should play poker.
yeah, yeah,
But where do you play? I mean, that's sort of my inspiration was like, where's the low stakes game that Chamath and Jason are never going to come, right? You might come with some time, but like how to get the skill
yeah,
to learn the lessons that you need to learn in order to play up and up, you have to start somewhere.
yeah,
And
yeah,
it's terrible. Like if I tell a founder, hey, here's spend the next 5 years playing at card rooms, grinding it out, right? And like maybe you'll get there, maybe you won't. Or come out and play with a bunch of founders, investors who are like, going to keep the stakes low so everybody can play. And then it's actually the game, like how you play the game, not how you play your stack,
yeah.
right?
I think that's true. There's lots of those very social games that go on. At least in Silicon Valley, they're everywhere.
Mm-hmm.
One of the best games I ever played in was a quarter 50 cent no limit game, except it was all and this is like 2005, 2006. It was all the YC founders. So it was the founder of Dropbox, the founder of Airbnb, the founder of Uber, the founders of Reddit. I mean, and it was a quarter 50 cent game.
Yeah.
And it was like by far from any ROI perspective, probably the most valuable game I've ever played in because the relationships that I built playing in that game, I've kept for a long time and are very valuable. So yeah, I don't. There's plenty of poker games, and the small stakes games are all over the place, and you gotta learn the skill. You can go read books, you can go play online. There's a lot of ways to learn how to play poker and get good, and depending on your talent and how hard you work at it, you can definitely get very good at it.
Oh,
I
for
mean,
sure, for
it's
sure.
yeah,
Well, what do you, so it's often, in fact, just Google Silicon Valley poker lessons I learned as a founder or, whatever. Uh, Lots and lots of founder investors write about the analogies between poker
sure,
and
yeah,
startups and the lessons you can learn. Some of them seem a little superficial. Like, yeah, I guess that's true, but like, is it actionable? Is it really a skill that you learn that will help you be a better founder? Right? Do you see any skills that you've picked up that you think have actually made you make better decisions an entrepreneur and as an investor because you had to be good at them to be successful at poker?
absolutely. So for me, Uh, my ex-wife liked to joke that I was like quasi Asperger's kind of like definitely on the spectrum when I first sort of started playing poker, and that poker taught me a lot about reading and understanding people because there's money on the line, and you got to learn that skill or you lose. And uh, that skill has been profoundly helpful for me. Like in and of itself, that like priceless skill. Understanding expected value. Like, so there's a great book by Annie Duke about what's the name? What's the
Thinking
title?
in bets.
Thinking Bets. And she just talks about how to think like a poker player, which as a poker player is all like, duh, this is super obvious. But like at the end of the day, what I've realized is that most people don't think in bets. Like they don't think about expected value. Like it's funny. I was out with a bunch of VC buddies, all other solo GPs. We had like there was maybe like 6 or 8 of us at the table. We had dinner, and then we were going to split up the check. And like so, like it was we're all solos, and nobody's paying with anyone else. We're all paying their own money. And I was like, hey, let's play credit card roulette for it. And some people are like, uncomfortable by the idea of playing credit card roulette, even though it's neutral expected value. So like if you play 1,000 times, you're going to win the same amount of times as if you would have basically just paid out of your own pocket. You're going to lose the same amount of times. It's the same, exactly. Nothing changes in terms of the dollars coming out of your pocket. It just changes the distribution of when they come out of your pocket. And yet people who were VCs were very uncomfortable playing credit card roulette. So I tweeted about this, and it went viral, and like thousands of people liked it, and like people got and it was amazing how many people responded to the tweet with like clearly people who were VCs or investors who clearly did not understand expected value. They were like they were just like they did not understand it. And so yeah, I think poker can definitely teach you how to think about how how that works. And if you don't know what expected value is, you definitely should read the book. Because it's a critical skill to have as an investor.
Yeah, actually, I buy that book for all my portfolio founders.
Yeah, yeah.
And I had the pleasure of having a conversation with Annie just before, I guess maybe just as COVID was coming. The book had been out for, I don't know, 6 months or a year, something like that. And a friend of mine shared a publisher with her. And he knew that like the thing that I'm trying to do with poker and to teach people how to do critical thinking for founders and stuff, like you should talk to her. You want to talk? And he said me, it was the most fun conversation. I was like, oh yeah, so here's what I think I see in poker and stars. She's like, yeah, it's even better than that. Let me tell you. Da, da, da. So I had a lot of fun. But it is, I think it is, just super core. Um, I'm curious. So poker rewards certain kinds of natural abilities too.
Yeah.
Like you might be the kind of person who naturally thinks about the math of plot odds or expected value, whatever it is. When you think about the natural tendencies you have, how many of those had to be overcome as a fan? Like things that were not good for you? Like Asperger's probably, it's a relationship game. The better you are at relationships, conceivably higher the probability. You sort of increase your luck surface area every time that you can make a good connection. But when you think about your own experiences as a human being, right? Aside from being found, what are the things you feel like you had to overcome, or the things that you think give you just a natural advantage?
I mean, for me, one of the things that was very helpful early on is that I tend to be a very disciplined person. And a lot of the people at the poker table are degenerate gamblers. And so, like, being disciplined in how you navigate the distribution of cards and the probabilities of the outcomes, and knowing that, and this is one of the ideas that Annie talks about, but it's critically important. There's an input of a decision. So you have a certain amount of information, and then you basically use that information to make a decision, and you then have an outcome, which is totally independent. So, I believe that basically I'm on the king high flush draw. I believe that is going to be the winning flush draw for whatever reason I believe it. And the card comes and it's a club, and I needed a heart, and I don't get my flush. Was my initial decision the right decision? Yes or no? If it was the right decision, then you don't care what you got. You're like, you made the right decision. You made the right bet. Whereas a lot of people basically get very tied up in the outcome, and when they win, they feel great, and when they lose, they feel bad, and it's the outcome that matters. Whereas being disciplined and being focused on the input and the outcome is independent of that, and you don't really care about that. You factor it, but you don't care about it. Was phenomenally helpful for me as a poker player. It made me very successful relative to a lot of my good friends who are just degenerate gamblers. God bless
Yeah,
them, but I make money
yeah,
from them.
yeah.
Um,
You want them at the table. Um,
yeah, I love it. I love gamblers.
well, but did you see when you were a founder, did that proclivity make you a better decision maker? Were
Sure,
your
yeah,
quality of your decisions better because of that? Like, focus on the decision, not the outcome. Did you feel like
yeah.
there were
So
decisions?
uh, I'll give you an example. We at the end of the sort of run for my company, Facebook was was about to go public, and they missed their Q4 earnings because they had built their ad platform badly. And Zuck went to the ads team and was like, "Guys, what should we do?" And they gave him 10 ideas. He greenlit all of them. And I had been banging on them for a long time. This is back when the ads team at Facebook was like 30 people. So like a tiny little group. And I had been banging on that team, being like, "Guys, let us buy your inventory. We have the engine. We can make that inventory sing. Let us do it." And so one of the ideas was to let that happen. And so I got the call and they're like, "We're going to let you buy." And I was like, "Woohoo." And I mean, we crushed it. I mean, we basically 10x the performance of their ad inventory in terms of price and an outcome. So like literally before they would get 1 click for every 3,000 impressions, we were getting 3 clicks for every 1,000 impressions. So like big difference. And then the prices we were able to pay was literally 10 times higher than what they were going to make. And our business went from 1 million in revenue to 30 million in revenue, and we had 300 million in revenue on the books in from 1 million to 30 million in 12 months, and then we had 300 million on the books. If Facebook had given us access, we would have, crushed it. Um, Unfortunately, at that time, basically, the ads team had a big powwow with Cheryl, and the decision was: do we continue to let these outsiders buy our inventory, or do we bring this in house? And the decision they made was we're going to bring it in house. And uh, I have a scar from one side of my belly to the other from Facebook gutting us in that process, and eventually we had to sell the company. Um, so if you go back to the initial decision, we knew we were betting on a platform that had a tendency to kill its partners, but that when you bet on a platform like that, it's like putting jet fuel right into your veins. You take off, and we knew that there was a huge amount of risk in that, but we also knew that we had lost the bet to be sort of like one of the leading DSPs. Trade desks and others had kind of kicked us to the back of the pack. So we were kind of shit out of luck in general. And we knew that the bet, if it worked, would work out in a big way. Like, going from 1 million to 30 million to 300 million in the space of 2 years is a pretty insane growth rate. And so we knew that there was some probability that Facebook would, one, let us continue to buy long enough that we could figure out how to like take advantage of the outcome. Two, they would make a mistake and need to acquire us, which they actually came to us and were going to acquire us. And there's a whole other crazy story there. Or three, we would find some other path. And we knew that the distribution of probabilities, even if we said that there was a 90% chance we would end up as roadkill, that the value of that 10% would be so high that it would be worth making that bet. And in retrospect, even though we ended up as roadkill, it was still the right bet. Like, and like I don't feel bad about the bet being made because it was the right bet at the time, and the outcome was unfortunate, but it was the right bet. And so now as an investor, I try to do the same thing all day long. And I try to help my founders with that, which is like, look, we're making a bet today. The outcome will be what it is. But like, let's remember that we made the bet today based on what we know today. And then we're going to navigate those outcomes as they occur. But we're not about basically saying, oh, what was the outcome? And then we're going to assign, blame or praise based on the outcome. We're going to assign blame or praise based on the input and the decision that was made when we knew what we knew.
That's interesting. The decision of Facebook to let you buy their inventory anyway was like it was the third club, or you had two in your hand. There's two on the board, and you're betting that you're going to get the fifth one. It didn't
Yeah.
come,
Yeah.
right? But you don't control the cards that come to you. You control how you play them,
Mm-hmm.
and that seems like a good example of what seems like you know what unforeseeable. They didn't have to make that mistake. They didn't have to screw the pooch in their ad team. They could have actually had a team that performed and didn't have a bad ad platform. They never had to work with you, but they
Yeah.
did.
Yeah.
That came to you,
Yeah.
and the resulting, as it's called, when you measure the quality of the decision by whether or not the outcome was exactly what you hoped for. But geez, like that decision, it's funny to hear you describe it as, in the end, I got gutted, but to have the run that you had, I'm guessing from a place that there was not a lot of other, multi decamillions, revenue stories over the next 2 years for you guys before they let you have their day
Oh
off.
no, no, yeah,
So
we
that's a
were.
remarkable, just a remarkable opportunity,
Yeah.
regardless of how it ended in the end.
Yeah. Yeah. And it was a reasonable bet. It was a good bet.
Yeah,
Yeah, unfortunately it didn't work, but it was a good bet.
yeah. Uh, well, listen, I appreciate your time. I've already gone longer than I told you I would go. So thank you for this, Zach. I hope you'll come out to one of our games sometime.
Sure, yeah.
It's a lot of fun. The stakes are very low though, so be warned. But you can always rebuy as often as you like. Uh, so thank you very much, man. I'm going to be down in the city, many times this year. I hope we get together and we can have a coffee or at least play some cards.
Yeah, sounds like a plan to me.
All right, man. Thank you very much.
Good to see you.
All right, cheers. And I got to say too, when I saw that you did your owner's manual, I thought, oh, what a brilliant idea. And I went and looked at your, I thought, it's not that I'm necessarily a hard case, but I just so many people want to reach out, right? And just telling them, here's how to do it.
Yeah,
I thought
yeah,
it was so
totally.
great. And
Yeah,
you had
totally.
you had in there, ADD, and it's a real thing, right?
Yeah, yeah, yeah.
And I was like, here I am now, 2 years later, whatever. I had full intention of like, okay, I'm gonna do that. I'm gonna create a plan. And I think ADD probably kept me from actually doing it. But I thought that was a brilliant idea.
Yeah, I don't know who I copied it from. Somebody else had one that once I saw, and yeah, no, it works really well.
Yeah,
I mean, I've yet to get anybody unhappy with it. I just want to find out things to add to it. I'm like, how can I make it better? But
yeah,
that's the
yeah.
goal.
All right, good. All right, man. Well, hey, thanks again. I really appreciate it. Look forward to talking again.
Yeah, good chatting. Enjoy the rest
Yeah,
of your day.
yeah, you too. Cheers.